Rohr here with an early global view on Thursday, October 23rd, 2014. It's currently 6:45 a.m. U.S. Central Time. And we've had quite a few macro factors affecting the market again. And before we get to any of the economic data, it's important to note that the sell-off in the equities yesterday afternoon was based upon the terror attack up in Canada. So, what does all this mean to the markets? And what it means for right now is that the correction in the S&P yesterday was very nominal compared to, of course, the huge rally back up from the huge breakout of 2 weeks ago into last Wednesday. And as you can see, it never even got down to a Fibonacci 25% retracement, which would have been around the top of the gap back in the 1909 area where there's support. And now the bulls who want to buy the market and the bears who want to try and pressure it have to be concerned that the aggressive upward channel was also not hit yesterday. That would have been late day down around 1912 area. And with the market up early today, let's go out mid to later this session and say, well, it's going to start to provide support in the levels like 1925, even into, as high as 1933 tomorrow morning. Now, the extended resistances are up into the 1950 to 55 area, so we will have to keep an eye on that, but that is an interim level. The bigger resistance is still the major congestion from up in the 1975 to 78 level, and even as far up as 1985 or so, which wouldn't surprise us if this intermediate term picture is filling out in a broader top. The big swings in both directions would be part of that. And as far as the indicators, note how even with the deflation due to the stall and reaction yesterday, the good old hourly MACD remained out above the upper runaway band, which was a good sign that the market tone remained quite good in spite of yesterday's sell-off. And that pretty much does it for the short-term view on the S&P 500.